Hey guys, what's up? Phil here from Innovation Hacks, and today we are going to deep dive into another interesting business model using Alexander Osterwalder's business model canvas, and you will find the link to their website in our video description below. The company we will be looking at for this deep dive is Robinhood, and without further ado, let's get into it. So first off, who is Robinhood and what does it do? Before Robinhood, anyone who wanted to invest in stocks, ETFs or options would be charged between $5 to $10 a trade, and they also needed to invest a minimum of $500 to open an account with one of the existing brokers. So that's quite expensive and uncomfortable. This is where Robinhood comes in. Robinhood changed not only the existing predominant structure, but also made it widely acceptable and common to trade via its mobile application that helps one to invest in stocks, ETFs, options, and even in cryptocurrencies, and that all commission free. And it is a particularly interesting business model because it offers several revenue streams to which we'll get in a bit. Now that we roughly know what it is and what it does, let's have a quick look at the company setup itself. The two founders, Vladimir Tenev and Baiju Bhatt, started Robinhood in 2013 after experiencing trade structures firsthand while being exposed to the stock market and its underlying industry. Developing a sense for better business and sharing their ideas early on a website like Hacker News, they started Robinhood with a huge waiting list of people. Ever since, latest numbers show that Robinhood was able to accumulate a stunning 13 million users or active accounts and counting. Robinhood, to this date, is still privately owned and went through a stunning 13 financing rounds so far. In its latest round in December 2020, the company was being valued at around $20 billion. Initially, and reminding everyone on the commission-free structure, Robinhood's claimed mission is to democratize access to the American financial system. Next up, let's have a look at numbers. Not having any reliable or fully disclosed financials, let's compare its business landscape. As of now, this will give you a rough idea to where Robinhood stands and where it might go. In an assets under management comparison, and that being an accumulation of all money invested through a broker, similarly to hedge funds, Robinhood already manages $20 billion plus. Compared to its closest competitors on US soil, there is still potential to grow. E-Trade, TD Ameritrade and Charles Schwab manage quite substantial amounts, as you can see. Carefully observing our next chart, one part of the Robinhood's customer targeting approach pops out immediately. Looking at the average account size in comparison to the same group of competitors, you see that Robinhood is targeting a completely different group of people, as the account size average indicates. To clarify this point, we're looking at an all-time classic positioning strategy of quality and price leadership. On one hand, we have a few professional investors with substantial big accounts, and on the other hand, the many small average person investor accounts with respectively smaller pockets. Although we are far away from any sort of equilibrium in this industry, the approach of Robinhood to enter this industry in this way, using its digital format for engagement and scale, is pure disruption. This positioning strategy is applicable to any other industry. Watch out for industries that are focused to serve a particular customer in a certain way, and weigh your options to create new value for the same or new customer segments with an innovative approach. Okay, next up, let's talk about the business model in depth. Obviously, we are in the stock and brokerage market, which in simple terms is an information overload dominated industry. And entering our business model canvas, and here you have a full-blown view on what we will go through the next couple minutes, our value proposition and the customer segments is where we start. Please feel free to download the complete business model canvas using the link in the description of this video. First off, and looking at our value proposition, the app provides access to trade at zero cost, prominently displays lists of stocks in an environment relatively free of complex information, and is a convenient, user-friendly and engaging digital solution. With this value proposition, our customer segments are constituted of first-time investors, high-frequency traders in a sense, and the retail brokerage market as a whole. There might be an additional customer segment in high-frequency trading firms, which I will get to in a minute. Focusing on our main users, customer relationships are built and maintained via various functionalities the mobile app or the website in the background uses for engagement. Users are informed with good enough real-time data and feel-good shortcut lists and notifications, accompanied by a strong loyalty and referral program as well as a basic educational learning platform. Channels that communicate the value proposition are all mobile devices, but also other online channels that are used by the community, such as Hacker News, TechCrunch, and Reddit, to name a few. Securing its value provided to market makers and trading firms, Robinhood builds on an easy-to-integrate and reliable API. That being said, I believe the first set of the general value proposition that addresses many newcomer investors as a whole is quite simple to understand. All in all, the value proposition targets many newcomer investors, but there is a catch. The commission-free model comes at a price, and that most likely provides a massive additional value for a whole other segment. My best guess is that bigger institutional trading firms are able to make sense of the aggregate of market movement. Where I am getting at with this? Let me quickly take you to an excursion on top of this business model deep dive, because from an innovator's perspective, this is genius. And for the sake of this deep dive, a very important point. Whenever you can build a business model which can provide an additional offering or service that enables the original value proposition to work better or become the product of the new additional offering, you create a triple win scenario for you, your user, and any third party involved, which you can and should make use of. So what happened here? What am I referring to? To illustrate this point in detail and in the form of a strategy, let's have a look at Amazon's flywheel. Please note, this strategy comes in various forms. In the case of Amazon, it leverages on customer experience to drive massive traffic to the platform. Remember, we want the following to happen. While providing a value proposition to one party, we want to create an additional value proposition to another. In Amazon's case, this strategy improves the selections of goods through the third-party network, aka Amazon FBA. This helps Amazon not to only increase their product offering, but also to improve its cost structure while decreasing prices and spins the flywheel. This cycle benefits the original customer as Amazon's product portfolio expansion generates a massive pull on the market and drives traffic, and well, I assume you know the rest of the story. Back to Robinhood, and you will reckon it's not quite the same thing as in Amazon's case, but not to bury the lead, I think Robinhood makes even more money from high-frequency trading firms by making sense of retail orders for institutional orders. Remember, in this particular case, they are the clients and the standard user's orders are the product. If the standard user puts in an order, that's retail. If any asset management firm puts in an order, that's institutional. The reason why this matters is many high-frequency trading firms are in the business of joining along larger institutional orders. If a large buyer builds a position and starts buying, prices tend to rise as there's only so much liquidity. Also, sellers are smart and they know they can raise prices if someone needs a lot of stock. In short, joining the party is profitable when you know others are buying. Maybe none of that actually happens, but I hardly doubt it. Maybe these sophisticated market makers have multiple strategies that identify the type of order flow. And this is a small part in their constellation of tools after all. So what's the catch here for the retail investor? All we suggest is the normal user's value proposition might be a trade-off. Free trades for privacy. I think people intuitively know that if something is free, there's usually an exchange further down the line. If there's a website, there's an advertisement. If flight tickets are inordinately cheap, we intuitively know we're making a trade-off, maybe in comfort. Retail investors and traders who use Robinhood likely don't value their own privacy enough, so it doesn't really matter. But I think it is important to understand that in aggregate, that personal information is extremely valuable for another party. So there has to be value in that cycle, and I just want to create awareness on this point, not dismissing that building this scheme is super innovative and very smart. Let's move on to the next building block, revenues. As discussed just a minute ago, and knowing that nothing in this world comes for free, it is pretty natural to ask, how does a free trading app make money? It does in several ways, and apart from my best guess on hidden revenue streams, here are the official ones that you can also find on their website. Let's quickly walk through them. First up, rebates from market makers. The company generates significant income from payments for order flow, a common although controversial practice whereby a broker receives compensation and other benefits for directing orders to different parties for trade execution. In Q2 2020, Robinhood generated approximately 180 million from payments for order flow, and we estimate that this revenue stream accounts to 40 to 55% of all revenue generated. Other sources of revenue include interest on uninvested cash deposited in interest-bearing bank accounts, stock loan income from lending the stocks you purchase on margin, a freemium business model at a $5 monthly fee for optional membership to Robinhood Gold, which gives the client access to margin loans and other investing tools, and others, mostly fees such as interchange fees from purchases made by you with the Swap Service debit card. Having talked to this point about all the visible touch points a customer or user can have, let's have a look at the company's structure that enables the business model we just discovered so far. In this part of the deep dive, we're looking at the backbone of the business and the left side of the business model canvas. Clearly, the key activities of Robinhood are in the platform operation, software development and monitoring, as well as analyzing big data sets. It all goes along with heavy work on compliance and regulatory provisions. Data security and uptime are also key activities Robinhood is looking after very keenly. Having a platform with millions of users and providing the value we just talked about, Robinhood at its core is dependent on a high frequency as well as a low latency trading platform. That speed and access to all relevant market players enables the whole business model in the first place, which makes it a key resource. No wonder we will find many of the key partners to be market makers, program banks, and the respective trading venues, as well as the regulatory setup with FINRA and SIPC. And as Robinhood is still a relatively young company, and we are in the finance world, also its group of owners or VC investors are key partners that need to be managed professionally. Robinhood is not a classical sell a product to a customer kind of business. Of course, it is worthless without users as we have a double-sided market platform in front of us. However, we can organize costs mostly in cost of operation instead of cost of sales. Maintaining, developing and securing might be the bigger chunk of overall costs. Not saying Robinhood has no user acquisition cost, but it also lives off a quite substantial organic reach, and for a long time profited from first mover advantage. And with this, we went through the official part of the business model. So, what puts the magic in Robinhood's business model? What makes it so interesting for everyone apart from its positioning in the market and the mobile access it provides? Our pick for the innovation hack is Robinhood's gamification strategies. So Robinhood's innovations, which are UX heavy, engage more market participation and customer engagement. Its referral and loyalty measures, as well as its customer acquisition success, is outstanding and well implemented. The group's zero commission model relies on high trading volumes, and it encourages users to use their platform with frequent email updates, mobile phone alerts, and emoji-laden messages. Confetti blasts, which pop up when customers complete trades, add to the sense that it is a game. Features and marketing ideas make it fun to invest. Top mover listings and other hot lists, as well as smart integrated pullback techniques, even a cash reward implemented in the app's overall function, show and convey the fear of missing out feeling. Overall, it's super user-friendly, comes with an engaging design on top of a simple navigation, as well as a uber-digestible data and information set. This in itself enables Robinhood to be the Candy Crush of the finance world and makes it our innovation hack for this business model. So what we witness here is a great example of gamification strategies simplifying a complex world very successfully into an everybody understandable, far simpler world of information. However, the clearly stated mission couldn't be more contradictory, as many small and first-time investors enter a world of full responsibility with their own money and other expectations. Robinhood beautifully overemphasizes the fun of trading, leaving Robinhood users susceptible to attention-induced trading, meaning it might be misleading first-time investors into a herd or groupthink kind of behavior, especially on hot stocks, instead of building and developing a sound and clear investment strategy. So in this case, both complexity and simplicity can lead investors astray. Just remember, as stated earlier, if you are not the user, you might be the data. This is how smart and tricky this business model operates, and its success shows. In reaction to Robinhood's success, the competitive space had to make their own moves. Apart from neo-brokers popping up in many countries with their own respective approach, the acquisition of TD Ameritrade by Charles Schwab for $26 billion and Morgan Stanley's $13 billion acquisition of E-Trade are all considered to be the result of creative disruption caused by Robinhood. Furthermore, Charles Schwab, E-Trade and TD Ameritrade all updated their commission fees in 2019, brazenly going after Robinhood's adolescent crowd. Summarizing this deep dive, let's quickly identify the innovation patterns we observed going through this business model. Number 1. Entering existing markets, challenging the predominant strategy with another approach. In this case, tackling a quality leadership ecosystem with a low cost or low entry model seems to be a very obvious way to go. However, it depends on how smartly you can execute on this market opportunity. This being said, markets with a leadership ecosystem can also be entered the other way around, either price or quality leadership. Number 2. You could argue that Robinhood at a first glance is a freemium business model. But as shown, first off, freemium is a revenue model, not a business model. Second, there are freemium heavy business models, just as the many video streaming providers that have built on it, the Netflixes and the Disney Pluses of this world. In the case of Robinhood, however, freemium is, if at all, a smart disguise. So don't be misled here. In any case, this is perfectly executed. Number 3. Providing value to one customer segment, which in aggregate is value for yet another, is a very clever way of a subsidizing pattern or virtuous cycle, in which you provide value at your own cost to benefit from another owned value stream mid to long term. This pattern comes in different ways and is more often in place than you can imagine. In the case of Robinhood, it is just not that obvious or openly communicated, and therefore very clever. Banks, for example, do it all the time when providing you with a free bank account, but charge heavily for all services that surrounds it. Same goes for B2B products with considerable high price tags that are offered with a low entry sales price, but high and enduring after-sales service plans. The elevator industry and aircraft turbine distribution come to mind here. Thanks for watching. I hope you enjoyed our business model deep dive and took some innovative approach or ideas away for yourself. In any case, please leave a comment in our comment section below and share businesses you want to be covered next for a deep dive, and feel free to support the channel by subscribing to it. This is Phil from Innovation Hacks. See you around. Thank you and goodbye.